Hi, good morning, everyone. Welcome to today's session on target maturity debt funds. Let's have a look at what instruments we have got till now to invest in debt funds. Debt funds meaning fixed income funds, जो हमें एक fixed rate of interest के bonds में invest करता है. तो ऐसे from a overall perspective, there are three classes where you could invest in debt. One is your traditional savings instrument like FDs. Then you have bonds, and then you have debt mutual funds. So traditional savings instrument में जैसे हमने FD रहती है. So over there, you go to a bank, you place your money in a bank. In bonds, you go to the market or you contact your broker or your wealth manager. You used to take a single bond of whatever you like. And debt mutual funds is like where the scheme manages money for you and tries to generate a return for you. In all of this, of course, there were pros and cons, but since a couple of years, there is this new instrument which is called passive debt funds or target maturity debt funds. Target maturity meaning that you have a particular year in which the index is maturing, and basis that an index of nearby maturing securities is created, and it becomes a passive fund where the fund manager invests in the underlying index securities and tries to replicate the index as much as possible. So what is debt funds? So debt funds combines the benefits of all three instruments that we spoke of, which is traditional savings, bonds, as well as other debt mutual funds. So in terms of traditional savings, it is simplicity. In an FD, you have a target maturity. Similarly, in a target maturity debt fund, you have some target maturity. In bonds, you have predictable returns, transparency of what is going on. Similarly, in target maturity debt funds, you know what the fund manager is putting money into. And third, of course, in terms of mutual funds, you have a low minimum investment. So unlike in bond where you had to invest in one bond, so if the face value was 10 lakh or 1 lakh, you needed to invest 1 lakh rupees. In a target maturity debt fund, you did not have a large amount of corpus. You can invest as low as 100 rupees over there. Plus, a target maturity debt fund gives you liquidity, which was being provided by mutual funds. So you can redeem your money at any point in time if you need the funds in an exigency, or you want to redeem your money before the planned horizon of investment that you had. And of course, it's professionally managed. So you get all three benefits of traditional savings, bonds, as well as other debt mutual funds that were coming in. So from a features perspective, debt passive funds or target maturity debt funds, they are transparent. They don't have, most of the funds don't have any lock-in. They are high quality instruments. So they invest in government securities of center or maybe state securities. So, state government securities, which are issued, which are also called SDL. So Government of India classifies government securities as center plus state. So both carry practically no risk of default is what RBI on its website also says. So, GSEC plus SDL, they are practically no risk of default over there. So, they invest over there, or maybe AAA PSU bonds or AAA corporate bonds. So, various indexes are there. It's an open-ended structure, and, you can take out your money whenever you want, if you want it before the horizon of investment. And there is no exit load as such over there. And last but not the least, it also has the feature of mutual funds, which from a debt perspective, currently income tax provides long-term investment of greater than 3 years indexation benefit, which you would not get in a traditional savings or a bond as on date. So, if you combine all these features, these look like a very lucrative kind of investment. Now, how has things moved? So post-COVID yields were lower. Now yields have risen, as you would have all known that interest rates have risen because central banks have been hiking their rates. We are very near to the peak of the cycle, maybe couple of rate hikes from here. So which are already priced into the curve. So from a portfolio allocation perspective, how can this help you achieve your goals, or in terms of an overall portfolio? Whilst equity is an important asset class, debt is also an important asset class. So from whatever you decide as a portion of your debt allocation, target maturity debt funds calls very loudly for allocation from all long-term debt investors who would want to invest in this asset class because of the features that we spoke of. And lastly, because your sovereign issuance or government of India issuance has went higher from where it was from a pre-COVID level, the yields have reset higher, and you are getting good YTMs in this portfolio right now. And for somebody to invest in, and this will provide a good good investment for any investor who is looking to invest from a long term basis. From a overall investment perspective, from we have from Aditya Birla Sun Life perspective, we have three index funds. One is which from a long term investment makes a case for investment. First one is Aditya Birla Sun Life Nifty SDL April 2027 Index Debt Fund, which invests in near and around the April 2027 SDLs, which is the state loans that we spoke of, which gets classified as GSEC. For that, as at 31st October, the YTM that was disclosed in the market was about 7.60%. Then you have Aditya Birla Sun Life CRISIL 50/50 Gilt plus SDL April 2028, where it invests in central government plus state government securities in April 2028, where the yield was around 7.5%. And Gilt April 2029 Index Fund of Aditya Birla Sun Life. So that also invests in April 2029 central government securities. So, these funds make sense. Why? Because we spoke yields are elevated and we are close to the peak of the cycle. Whenever the cycle turns, maybe 2 or 3 years hence, or you don't know, if you are a long-term debt investor. So maybe you don't have a horizon of 2028-29. So somebody who has a horizon of 2028-29 should surely invest over there. But even if you have an intermittent horizon post 3 years, if the interest rate cycle is lower, it also opens up a window of capital gains for investors. So it makes sense for debt investors to allocate a part of their portfolio to these funds. Largely this is how maybe the thought process should work. If you have long-term debt investment allocation, debt passive debt index funds are shouting largely for allocation from investors, and it is an opportune time for investors to invest over here, given how yields have moved higher. And second, it might open a window of opportunity for investors to capitalize on some capital gains, given that the interest rate cycle turn a couple of years around. At that time, you will have a good potential to earn some capital gain over here, along with the high accrual that you are getting right now. Of course, the question comes in from many investors to us is that, this will be mark to market on a daily basis. Yes, mutual fund investments are mark to market on a daily basis. But the way to look at it is, if you are a long-term debt investor, or you invest in a bond or a FD, you don't go and look at it on a everyday, weekly or monthly basis, and you look at the accrual statement. You look at maybe a horizon of investment. So if you are invested till the maturity in a debt index fund, then you will get the YTM minus the expense and a little bit of tracking error that will happen because of various inflows and outflows. Apart from that, there is high predictability of return if you are investing till maturity of the fund. So, yes, just to summarize, long-term debt investors should look at investing in our passive debt index funds. And maybe we can take questions from here on. Yeah, we'll just wait for the question queue to start. Yeah, so we have the first question, which says that what is the time horizon for investment and how long should I stay invested? So, from a debt investment perspective, these index funds comparative to, if I were to invest, then from a short-term or long-term debt investment allocation perspective, one should start allocating over here. For shorter tenor investment, we have June 2023 index fund also. We have something in 25 also. We have something in 26 also. But the time horizon for investment likely should be greater than 3 years. If you are investing for greater than 3 years, then I'm suggesting somebody to invest in 27, 28, 29. So, to complete the full interest rate cycle and take benefit of the cycle downturn whenever the cycle turns on the other side. And for shorter tenor investment, also, if you have some money for shorter tenor, you can park it in one of the index funds of shorter maturity. So, depending on your time horizon, you should select the investment. For shorter tenor, for maybe about 6 month money, you should invest in our ABSL CRISIL triple IBX triple A June 2023 index fund. And for longer tenor investment, as we discussed, the 27, 28, and 29 fund is where people should invest in. The right time to invest in this fund, we've been calling since maybe May, June that these funds look good. The YTM is largely in that 5-10 basis points unchanged. मतलब जो YTM थी फंड की मई जून में, वो आज भी उसके आसपास में होवर कर रही है. तो हम तो मई जून से ही बोल रहे हैं कि वन शुड स्टार्ट पुटिंग मनी. सो देयर फ्रॉम अ yield perspective, because your yields have risen so much, one should start allocating right now in these funds. क्योंकि क्या हो सकता है कि in the next coming time, if जैसे आप देख रहे हैं कि there are a lot of job cuts which are happening, there is a lot of recession talks which are happening. So if a recession kicks in and job cuts and growth fears start capturing the market, then you will see that central banks will err on the other side, will pause their rate hikes, and they might think of doing some rate cuts 6 months, 9 months, or maybe 1 year hence. So the yield curve will adjust lower. So right at this time is the right opportunity, is what we feel that one should start allocating to these funds. We have another question is, if I want to invest but I don't have any maturity in mind, then maybe you should look at investing in our ABSL Nifty SDL April 2027 index fund, because that is a very sweet spot. It is about 4.5 years kind of maturity from here. So one can look to allocate over there. And then once you can decide, once your investment, once you are looking to liquidate it, you can always liquidate it whenever you want. It is giving a good YTM in our view. Minimum investment, there is no minimum investment which is required for investors right now. So, I think as low as 100 rupees also can be invested in this fund. So there is no minimum investment threshold over here. Somebody's asked that, please put some light on returns post-tax for FD and target maturity funds. तो इसको हम basically समझाते हैं कि FD पे you are charged from the current income tax norms, as I understand, is on a marginal tax rate. So अगर आप 30% tax bracket में, तो you will end up paying 30% on the entire interest portion. So, let's say you are earning 10% over here and we assume 30% taxation plus the cess, let's forget that. So, 10% पे 30% भरोगे, तो you will earn around 7% over there. Similarly, if you are earning 10% over here in a target maturity index fund, you will have to pay tax on the return over and above the inflation. So cost inflation index, which is decided and announced by the income tax authorities every year. So let's say if the cost inflation index is 6 or 7%, let's assume that it comes at 6% for the next year or the coming years. Then you will have to pay tax only on the 4%, and that too at the rate of 20%. So you will pay up only 0.8% as the tax. So from a tax comparability perspective, for anybody who is invested more than 3 years in any of these funds, has the benefit goes towards investing in target maturity debt funds. The second bigger benefit is if somebody is coming less than 3 years. So less than 3 years में क्या होता है कि FD में you are charged on the interest. Whereas let's say if you are investing in a growth scheme in a target maturity debt fund, your interest keeps on accruing, and when you redeem from this fund, you are charged as capital gains, and then capital gains can be treated as per how your income is and how your definition is. So this can get netted off against any short-term capital loss, etc. also that you have. So one will have to look at it from that point of view. But from a taxability point of view, the way we feel is that target maturity debt index funds are way better than your regular savings funds from a taxability perspective. So what is an index and where can I find your indexes? So index, first we will say that index can be found. There are two companies who are providing index for us. One is CRISIL and the second one is NSE. So you can find our indexes on the CRISIL and NSE website, as well as on our website. You will be able to find what is the index for the funds that I am speaking of. So what is an index and how is it made? So let's say take an example of the Nifty SDL April 2027 index fund that we have. In that fund, the CRISIL takes all the nearby maturities to of April 2027 of the SDLs, then ranks it on the basis of the amount of outstanding. Because for us to deploy money or to generate money out of this, we need to have liquidity in these instruments. So first criteria is maybe on the outstanding level of these SDLs in this maturity. Second, what is done is that, from the outstanding, they look at the traded levels, how much is being traded outstanding in these securities. And basis that, the top 10 or top 12 securities are taken for constructing the index. So just like in equity, you have the Nifty index where the top 50 are taken basis market cap, trading, and the free float. Similarly, for a debt index fund, some of these criteria like the amount outstanding and the amount of traded value is taken in consideration whilst building the index, and the top 10 or top 12 securities or top 7 securities basis the index is taken for constructing the index. And these are agencies which are CRISIL and like CRISIL and NSE, which make this index for us. How is it helping in long run? That's the another question. From a long run perspective, like we said, for long-term debt investors, it is providing some visibility of return basis if you are invested till the maturity. Second, it is providing a superior return as compared to regular savings if you compare on a post-tax basis. And given that GSEC yields are elevated, you are getting considerably good returns over here in terms of the YTM of the fund as of now. एक और क्वेश्चन है हमने कि इंटरेस्ट रेट्स हाई है, क्या इन्वेस्टर अपना प्रॉफिट बुक कर सकते हैं 3 साल में अगर इंटरेस्ट रेट्स नीचे गए? तो यस, इन्वेस्टर अपना प्रॉफिट बुक कर सकते हैं 3 साल के बाद। जैसे मैंने बताया, ये फंड से आप कभी भी निकाल सकते हो, इसमें कोई पाबंदी नहीं है। अगर आप टारगेट मैच्योरिटी डेट फंड में पैसा निवेश करते हैं तो आप कभी भी अपना पैसा नॉर्मल वर्किंग डे पे रिडेम्पशन मारेंगे 3 बजे के पहले, तो दूसरे दिन सुबह में आपके अकाउंट में क्रेडिट आ जाएगा बेसिक। बट इसमें मार्क टू मार्केट लगता है, तो बीच में मार्क टू मार्केट के हिसाब से, जैसे आप अगर एफडी में निवेश करते हैं, आप जाते हैं तो वहां पे एक आपको फोर क्लोजर चार्जेस लगते हैं या प्री मैच्योर पेनल्टी लगती है, और इंटरेस्ट रेट थोड़ा कम करके देते हैं बेसिस द बकेट। यहाँ पे ऐसा नहीं होता है, यहाँ पे जो नैव या मार्क टू मार्केट होगी उसके हिसाब से आपको पैसे मिल जाएगा। तो जब लेट से अगर इंटरेस्ट रेट्स अभी ऊपर है और 2 साल या 3 साल के बाद साइकिल नीचे जाएगी, जब इंटरेस्ट रेट नीचे आ जाएंगे तो आपको वो मार्क टू मार्केट में रिफ्लेक्ट हो जाएगा। तो आपको इंटरेस्ट का जो अक्रूवल है, जैसे आज की YTM 7.5 है तो 7.5 के हिसाब से आप अर्न करेंगे, प्लस उसके ऊपर जो आपका प्रॉफिट होगा, क्योंकि इंटरेस्ट रेट नीचे आएंगे, क्योंकि बॉन्ड की यील्ड मतलब इंटरेस्ट रेट और बॉन्ड का प्राइस इनवर्सली रिलेटेड होता है। मतलब इंटरेस्ट रेट ऊपर जाते हैं तो बॉन्ड का प्राइस नीचे आता है, और इंटरेस्ट रेट जब नीचे जाते हैं तब बॉन्ड का प्राइस ऊपर आता है। तो वैसे ही जब इंटरेस्ट रेट नीचे जाएंगे तब ये जब जो सिक्योरिटीज में इन्वेस्टेड होंगे उसका प्राइस ऊपर आएगा, तो इसमें आप कैपिटल गेन बुक कर पाएंगे। एक लास्ट क्वेश्चन हम लेते हैं। लास्ट क्वेश्चन पूछता है कि विच फंड्स ऑफ ABSL MF दैट वन कैन इन्वेस्ट इन। तो मैं 3 फंड मेरे ओर से रेकमेंड करूंगा। वैसे हमारे अभी 9 फंड है, उसमें से 3 फंड है हमारे। पहला फंड मैं कह रहा हूँ आदित्य बिरला सन लाइफ निफ्टी SDL अप्रैल 2027 इंडेक्स डेट फंड। दूसरा फंड है आदित्य बिरला सन लाइफ क्रिसिल IBX 50/50 गिल्ट प्लस SDL अप्रैल 2028 इंडेक्स फंड। और तीसरा फंड आदित्य बिरला सन लाइफ क्रिसिल IBX गिल्ट अप्रैल 2029 इंडेक्स फंड। ये 3 फंड जो हमारे अभी लाइव है उसमें हम निवेश कर सकते हैं। तो ये लास्ट क्वेश्चन था। आई होप दैट दिस वेबिनार हैज बीन यूजफुल फॉर ऑल ऑफ यू, and if you have any further question you can post and then we will come back to you with a response to it. Thank you everyone and have a very nice day ahead.